Welcome, everybody, to another episode of Steady Lads. We have an exciting one today. We broke out of the range, the boring trading range that we had. We can see the chart here, but unfortunately, it was to the downside. So we've had a little bit of a breakdown. And, we have top crew for analysis here today. I have my quantitative here,
My quantitative, my math specialist. Look at him.
Thicky. You can look at his face.
Look at his face.
Look at his eyes
Look at his eyes.
very carefully. This guy got first in a Bybit trading competition. Okay, so Thicky, give us the lowdown. What are you seeing here?
Yeah, well, my actual name's Alex, not Thicky, and I placed fifth in that Bybit trading competition.
So you verify that you're still at Scimitar Capital. You managed to not get fired. It seemed for a second that you were being let go.
Yeah, it was a rough start to the month, but I had to beg my boss for my job back, and luckily, able to make it all back and more.
Wow. Okay. I mean, in such a bear market, I think the viewers would be quite interested. Like, how are you finding alpha? How are you doing so well in the bear market? How are you coping?
There were like two big wins that I think were like kind of anomalous in the volatility event. The first one was when so the XRP inverse contract. So basically, like when you trade perpetuals, you can either deposit stables and then trade the perpetuals, or you can deposit spot and trade perpetuals. And they trade in different markets, and they usually trade very in line. So when the market crashed, one of them actually dislocated by around 33%, which is kind of insane. It's like someone got blown out, and it was stuck there for like 20, 30 minutes. So yeah, definitely the biggest win this week was just manually going in, fixing that arbitrage. I think I made like 200 from that dislocation.
Nice, pretty chunky. I know that Bybit has unified trading accounts, but I saw that they separated out the perpetuals for coin margin. Those are not in the unified. So
Exactly.
if somebody has a bunch of unified money, they still can't trade those different perpetuals. You need that coin.
Exactly, yeah. And I think that's the reason why it persisted for so long, because like no one, I don't know, like most people just don't trade inverse perpetuals. Like for me, it took me like 5 minutes to figure out how to transfer the money to the account, and when I needed to go buy spot and then transfer it and then like buy the contract with spot. It was really confusing.
Yeah, it's awesome that those kind of inefficiencies still exist. Those trading formats, these kind of inverse, I think it's a lot of old school traders that like these, because these were like the BitMEX style back in the day. So that's awesome. Okay, so you made a chunk there, and where else did you find alpha?
So the rest was just that mega candle. It like when the BTC went down to 24.2, it just like stuck there for like 10 seconds. And in my mind, I was just like, it feels terrible to bid here, but like I just have to bid. So I think I put like maybe 95% of the firm's capital.
I didn't know that the junior busboy gets such a capital allocation.
So you just perfectly long the bottom is what you're telling us.
I literally bottom ticked it, yeah.
Wow.
And that was like another like 150, I think.
Just for everyone listening, we have a Telegram group chat, and Thicky could have told us to buy at this point, but we didn't get a message from him. We didn't hear anything from the guy all day. So we're just all running around like headless chickens, and I guess Thicky's just trading this perfectly.
I mean, definitely got super lucky. And I think the rest, maybe like 35% of the rest, was just from shorting alts.
And you said 10 seconds was the BTC time window, which maybe explains why you didn't let us know. But does that mean like you just kind of like need to be in front of the screen 24 hours to catch those like 10-second opportunities?
Yeah, exactly. I set the chart. So like, usually people have like 1 minute charts, but I set my charts to like ticks. So like every 100 trades, it makes a new candle. And what happened is like it obviously went down, and then like someone had a huge bid on perps at around 24.2. It just kept like ping ponging in that range for like 10 seconds, and I guess like I just figured that was the time.
Nice. Well played. It's nice to see you guys up on that leaderboard. Maybe the offer from DWF will not get accepted today. We'll see.
Yeah, exactly.
Yeah, I have one question, Dickie. Would you say that like most of your trading wins is around all these inefficiencies, where first it's like the XRP, like someone got blown out, and then in the case of PTC, like obviously someone was like, I mean, maybe someone blew up, maybe someone just like was like forced sellers, and you noticed that there's a bid around 24.2, and you're like, okay, like maybe this is like a good demand zone for me to step in. Like, if like if our audience, right, for example, can only watch the daily chart, the weekly chart, like how do you think that they can, I guess, extract value in these markets, or do you think that that's like way too hard?
I think this is more like a one-off. Definitely, like the majority of my P&L this year is just coming from like doing deep research and then putting on a position. It's usually not like something like a frantic inefficiency. Like this is kind of, yeah, definitely a rare one-off occurrence for us.
And I know you guys were building during the bull market. You weren't trading, so you maybe you were trading on the side. But like, how different is it now in the bear like versus the bull? Did you see like there were a lot more opportunities back then, or what are you experiencing?
I think the meta definitely has changed. I think like if you look at the altcoin, the total three chart has just been down only, and like I mean, the only correct meta right now is just the short alts, because there's just so much supply coming in the market, and there's not enough demand to buy these new altcoins. There's still like 75 to 100 billion dollars of altcoin supply that have are still locked and they're still going to hit the market, and it's definitely going to affect trading, circulating prices. So yeah, I think that's just been the theme of this year, and like you really can't make that much shorting. It's not like you can't hit a home run every time you short an alt because like your upside's limited, unlike when you long an alt. But I guess if you just keep doing it, like it builds up eventually, is the kind of takeaway from this year.
Yeah, I definitely look at shorts quite a bit myself. I've written some threads about it because it's a very dangerous thing to do, and I don't recommend most novice traders to try to do any shorting, especially right now. So the meta, as we've seen, and GCR talked about this, but we're seeing that some of the manipulative market makers or trading firms have been using short squeezes and using the funding rate to like milk people who get stuck in shorts and just keep getting the funding rate at max negative 2% per window, and just milking it by manipulating the spot price. So we're hoping to get crypto cred next week as a guest to discuss this. He wrote an epic tweet describing some of these dynamics. So for all the traders out there, all the trading curious, next week we should have a banger segment for you guys that we're looking forward to. But let me go to Justin. So Justin, you're less on the trading side. You're more, you're in the fundamentals. You're in the weeds. You're building. You're doing the actual crypto, not the coin crypto, the real
I'm
stuff.
not just extracting value.
Mhm.
I'm trying to
Yeah.
make value.
Obviously bear markets are tough for making value as well. I know CZ talks about build, the bear markets for building, but I find that personally a little bit too optimistic, let's say. It's not that simple. Like, how are you feeling? How are you experiencing it?
Yeah, I mean it's really tough, right? So the way we've been talking about it and I've been explaining it is the pie is certainly not growing right now. It's probably shrinking. I think users are probably still leaving the Web3 space, or at the very best, it's just sort of about flat. And so everyone is competing for the same amount of capital or lower, less and less capital each week and fewer users, right? And so it makes it extremely competitive. And I think like that leads to some toxicity that you see on Twitter, right? Like everyone is much more tribal. I'm not just talking about people working on projects or building, but really investing too, right? Like you're seeing communities like much more antagonistic, I think, than in the bull market. Everyone is sort of feeling very defensive. Everyone feels like they're backed in the corner, in a corner a little bit, and I think it makes it tough. I think we're going to talk about this a little more as well. I know you're doing some fundraising now, but fortunately, we raised before the bear market started, so it wasn't an issue for us. But I know a ton of teams that very talented people that would have easily been funded 1 to 2 years ago at pretty decent, valuations, even pre-product, and now that's just not possible. So
What do they do? Do they just like self fund and try to get to some working product themselves, or do they just end up taking jobs, like normal jobs, or what do those people end up doing?
yeah, I mean, so usually, I mean, we've seen so many projects shut down. I feel like over the last year, that seems to be very common. I think crypto people are a little different in that, like, a lot of the people building this space are like financially well off, presumably from like being somewhat early in crypto, that it's not like a huge financial concern for them. But I know a lot of people that are either trying to sort of do an like get hired by another project, or have their project, sort of be bought out with equity, because no one's like buying projects out with cash now. I think the last big one we saw there was when Uniswap bought Genie, right? I think it was like at some $100 million valuation, and the Uniswap NFT integration has not done well. They're seeing like low single digit trades on Uniswap NFT per day. So I think like large M&A activity is basically non-existent. It just doesn't make much sense right now. And so I think we're seeing a lot of projects shut down, a lot of smart people joining other teams. I can tell you it's much easier to hire now. So we see like tons of great candidates come up, especially in the smart contract space. So smart contract engineers are out there, which is awesome. But we're just seeing what you'd expect to see, like more competition. It's harder to get the word out about your product. I think everyone in this space looks at Friend.Tech, which I know we're going to talk about a little bit, and we're all wondering, like, how do you catch that lightning in a bottle? What
Yeah.
makes Friend.Tech succeed, and everything else is just like, meh.
Yeah, I mean, as a builder, you're fighting so hard to get 1,000 users or something. I mean, I know some of the top dexes, even though we talk about them a lot, like the GMXs and all these things, you look at how many daily active users they have, and it's usually like in the hundreds. It's not millions of people. But how do you feel when you see a success? Let's not call it a success story, because it's very early, but something like Friend.Tech, or Step In a couple of years ago, one of these apps comes out and seems to just catch lightning in a bottle. They don't have a fully functioning product. They haven't fully figured everything out, but it just seems like they get enough of the formula right. Do you feel like you want to learn from it? Do you feel like angry because, like, oh, this shitty stuff is working, but like my cool thing isn't working? Like, what's the reaction that you have seeing that?
Yeah, I mean, it's tough, right? I mean, I use Friend.Tech. It's really fun. It's exciting, and I'm like really encouraged by what they did, because there's a ton of innovations we can talk about that, in my opinion, are really smart. But it's certainly tough. Like there is this like non tangible like flywheel that gets kicked off with a new project, where people are using Friend.Tech, right, to make money, and people are using it because everyone's using it, and because everyone's using it, you can make money. And that flywheel could kick off with so many other different projects, right? But it doesn't. And I'm, trying to spend a lot of time thinking about why Friend.Tech succeeded. I think being on a new chain is like super helpful. So launching when a new chain launches makes a ton of sense, because capital is going there anyway, and they want to find something to do. But yeah, it's definitely a little tough to see, but it's also inspiring at the same time.
I mean, there is no airdrop though on base, even though it is a new chain. So from that aspect, it's quite interesting. But it's not like we saw with GMX and Arbitrum back then. And I know, Taiki, you've already done a early on. You were one of the earliest to do a deep dive into Friend.Tech. I think it's been a couple of weeks already now. I know you've had more time to digest and experience it. Have you been a user? Have you been an active user? Like, how are you finding Friend.Tech right now?
Yeah, I was like, I guess pretty early on, and I first signed up and I bought shares of like other crypto Twitter influencers, and some of those shares have appreciated. But I think now, given the fees are so high, so like there's a 10% fee, 5% goes to the marketplace, 5% goes to the creator key, and Justin, if you can pull up the Dune dashboard, given the fees are so high, I think the system currently relies on new money coming into the application, because otherwise, as people sell, as people extract value, 10% leaves the ecosystem. It's kind of like the similar problem with NFT royalties. And if you look at the right hand side here with the Friend.Tech protocol inflow, we had a huge boost a couple of days ago, or like a week ago, with Paradigm announcing its investment, and people getting airdrop points. But now we're back to the pre-hype phase. So if this can't pick up, then I think that the average key, the value of it is going to just trend down. But we do know that every Friday people get airdrop points, and new referral codes. So perhaps every Friday and every weekend we're going to see a spike up in user activity. And the airdrop, right? Like the Friend.Tech airdrop has to happen soon, because if it's going to take 6 months, I think the hype is going to die down. But maybe if they can do it in October, November, maybe the hype can continue. And the one promising thing that I've seen is that it's actually onboarding like people from other industries and not like just crypto natives. We saw an NVA athlete, Grayson Allen, join. We were seeing like a bunch of like OnlyFans girls join. which I mean, I think it's like fine, right? And there's like other gamers too. So if it can attract people from different industries and they're spreading it to their audience, then that can grow.
I mean, it's definitely showing it's showing like a product market fit, right? Like suddenly there is proof that people are at least interested in the idea of, yeah, you called it keys now, which it seems like you've already adapted from shares to keys. I know it used to be called shares, and
Yeah.
they very cleverly like changed it so it's not looking like an investment product. So you have keys of people, and people do want to check it out. We've seen like a burst and this double top potentially of activity. The question is probably going to be, are people going to get enough value out of it as a creator? Like, are you able to give people enough that they'll keep wanting to use this app? Or is this just because we had a Black Mirror episode a couple of years ago talking about this concept, and now we're seeing it in action? People want to just try it and see like if Black Mirror is in reality. I mean, you're a content creator, Taiki. Are you feeling like people are going to be able to provide value to key holders?
It's pretty hard because most of the value that creators get, it's like upfront. And I feel like one thing that I've noticed is that like I've seen some other content creators like who, if you buy a key, they give you access to like a Discord, right? So because like the chat feature is basically broken, they're trying to get people on the Telegrams and Discords. But the problem is if someone sells a key, then they're still in the Discord, so it's like not perfect there. So until they fix the chat feature to allow for photos, videos, I don't really think that this can sustain. But I think the reason people are super excited is because it's one of those things that it makes people feel like they're super early into something, right? It gives people hopium, basically. And I think crypto needs hopium, especially in this type of market. And this hope that, okay, like maybe if I buy shares of Thicky, right, he's at 0.3 ETH, okay, he's going to be number one in the Bybit leaderboards at some point. He's going to be worth so much more because he's going to share some thicky alpha.
I mean, is that the whole case? Like people are going to share alpha? I mean, it would be cooler if they could share some revenue stream, right? Like if you could get your Twitter, some people are getting paid from Twitter every month or something, right? You get some payment if you sign up for that. Potentially, you could plug that in, and it creates even more of a financial product. And I don't know, like Vicky, do you see something like Friend.Tech from a trader perspective as an opportunity where you can make money trading?
I think that's what something Al mentioned. I guess the one way you could pass back revenues is like whatever revenues you generate, either from the fees or from whatever you do normally, you just use it to buy back the shares, and it kind of distributes it as a share dividend. The only issue is like it only makes sense if you can actually, like, let's say people invest in you, and it only makes sense if you can sell your shares and use that capital to like fund your business. But yeah, there's a lot of value capture from the protocol from that. It is kind of expensive, and people don't like having the share own, like the guy sell your own shares. It's just kind of a bad look. So that part needs to be streamlined, I think.
I think your assumption that they have product market fit. I mean, they certainly have it in the short term, right? As some speculative product market fit, but I think assuming they have sustainable product market fit, it's very much too early to tell. I mean, you can see here, if you're looking at the leaderboard here, you can see like this is all P&L, right? Like people are all just interested in speculating and trading on these tokens, right? These are just meme coins attached to a name. And that's really all the utility is right now. I don't think this sort of like private chat room provides any real value at the moment. I think they could build something, but I think if they want to achieve a sustainable product market fit, they basically have to rework the entire model of how creators are getting paid and how people are paying them, right? So like it doesn't make sense that the creator makes no money, like Taiki was saying, when someone just holds their key and sits in their room, right? Like you need to be providing continuous value, and then you need to be like continually extracting value. I know that sounds negative, right? But like if you have users that want to pay for your content, they should be paying continuously as opposed to just, building a bot that buys their share the second they sign up, just holding that and then trying to, dump those keys on a grid or fool. So I think some real changes need to be made. There's also a lot we can talk about the bonding curve that decides the pricing for the key. It's extremely steep so that like you basically cap out access at, under 200 people, which makes it very hard to have a compelling case that, like, if I'm making thousands of dollars on Twitter via Twitter ads, that I'm willing to share that revenue when I'm really not making that much money off Friend.Tech. I know we've seen Kobe and others make a few $100,000, but I don't think that's going to be the base case for like any of us, right? If any of us opened up an account, or we do, some of us do. So I don't think there's sustainable product market fit yet, but I do think Friend.Tech has done some really exciting stuff and they could get there. But I also
Right.
question, like Taiki, your point about the airdrop. I don't know if the airdrop will make a difference. I mean, there's this really interesting tweet here from Altcoin Psycho about if airdrops are pointless or not. And in some ways, I think that's kind of true, right? Like the second Friend.Tech drops this coin, most people are just going to dump it. Who's going to hold this? Why are people going to buy it? How does it add value to the system as opposed to just creating another hype cycle and another bubble? So that that's my little rant there.
Yeah, Psycho has had some spicy takes this week, and that was one of them. The airdrops are useless, and we've seen projects get sibbled for airdrops with bots that are obviously just trying to make money and sell them. And I don't know if they're useless. They potentially get attention, and that's one thing that if you've been in the space for a long time and you've talked to exchanges and other protocols, you've probably figured out that influencers are very important for crypto. When you have a product, when you have an exchange, some of the biggest exchanges like Bybit and some of these ones, they got literally made by some specific influencers, right? Like there's this Korean guy that like goes on stream and gambles like a ton of money and falls asleep and wakes up liquidated. But then like he gets like a ton of traders to sign up and follow him. And in essence, maybe what we're seeing with Friend.Tech is maybe to support your point, Justin, that it's not necessarily a deep product market fit. But what we're seeing is they managed to get the influencers incentivized because they've literally given them a very easy way to make. If I signed up tomorrow, I'm sure I would make, let's say, 10 ETH or something, right? Like it wouldn't be that hard to just have some bots buy and sell your shares and make some fees on that. And they're in essence being very successful at buying the attention and getting like people to tweet about them. We've seen so many of the big crypto influencers tweet about them. And if you put a dollar value on if you had tried to hire all those people and like, pay them to show your product, it probably would be worth, millions of dollars to get all those people to tweet about you. And yeah, they've made 10 million in fees or whatever they've made. So is this, I don't know, Thicky, like, do you think this is just a matter of getting the influencers incentivized and buying that attention share, or is it something more?
Yeah, I think there's some sort of Ponzi-nomical aspect to it. If like as long as you're bringing in new money and attention keeps growing, then like even if the mechanism is flawed, like it can still succeed. I think what Racer did with so they had like that first mini cycle and then like everything retraced, and then he reinvested all the protocol fees and basically just gave everyone an airdrop. Like all shareholders pretty much they doubled all their value when Racer reinjected the ETH into everyone's shares. So I think like as long as he keeps doing that and it's kind of random and people just never know when that's going to come, like if you couple that with more attention going in, stories of just people making 50K, 100K just for being on an app, I think it can hit a flywheel and keep growing. As long as the bots don't extract too much value at the beginning, because like those MEV snipers are really extracting sucking a lot of money out of the system and ruining the wealth effect.
Yeah, I mean that's something that I've personally said. But as long as these bots are going wild and I don't have a way around them, I'm not going to sign up because it's in essence, a bot comes in, buys 20, 30 shares, and then as soon as somebody wants to actually follow you, they're just going to get dumped on, and their share price is going to go down by 30, 40% or something. So that's a UI problem. Justin mentioned some of the other UI problems. The bonding curve, a huge issue with it. Taiki's, has talked about as a content creator, like apart from upfront value, how do you do much? I mean, they're going to have to expand the capability of the app, even though it's janky enough. People seem to be complaining about the server and the lag time. I know the OnlyFans girls are going to want to have some videos or some images at least. And, you know, I understand from the product side, like Justin, you're on the product side. Like if you were making this product, I understand why they went so safe at the beginning. Like it's text only. They obviously need to take some risks. They can't just make it very vanilla like it is now, where you can't share images. OnlyFans people, they want videos potentially, but then you start becoming like an X-rated interface potentially that can have legal liabilities. Like, which route would you take? Would you just say, hey, it's decentralized, people can put goatsy or whatever they want to put up here, and it's not my responsibility, or do you try to keep it like a sandbox?
I think you sort of mirror Twitter and what they've done. So what's interesting is Twitter, there's pornography allowed on Twitter, but it's sort of isolated, right? Like I never encounter it. I'm sure you guys don't either. If you're just going through your feed, it's not something you see. It's something you have to seek out. And I think that's more the approach they should take. They should let people use it how they wish. And because Friend.Tech is a very isolated experience, it's not very social broadly like Twitter is. You're getting, like one-on-one interactions, and you only have one-way communication with the owner of that, the shared chat, that it's not going to be a huge issue for them. But what I want to ask you guys is, there's this theory in the crypto space that like everything will be tokenized, and people really do want to have like financial value attached to everything and speculate on everything. And like just broadly about the idea, because simply put, this is just like everyone gets a meme coin in their name. That's like what it is right now. We can talk about adding value and delivering value to your chat, but like 99% of people can't deliver alpha. And if they can't do it consistently, right? So this is really just everyone gets a meme coin that can be speculated on. Like, what are your thoughts about that? Like in the future, will all of us just have like a Justin Bram token and anyone can buy it or sell it, and there's like this mimetic value to it and it's fun to trade? Is that the innovation here? Is that what people are going to, keep leaning into?
I think it has the novelty aspect. Like I said, it's the first time that we've seen something take off in this category, but I don't think it's healthy, for young people especially, to like associate themselves with a token that goes up or down. I've seen some of the other takes from Twitter people and other podcasts talking about if somebody can start shorting you, and then they might be incentivized to hurt you. There's these kind of problems, but ultimately, if all we make is a better version of Patreon, where you can also, be a bit more partaking in someone's journey as a content creator, and this just becomes something for content creators, and potentially there's an upside. And I agree, this will succeed or fail based on how well and how quickly they make improvements, right? Like how good is the team? The team has a chance. They got the attention. They're going to have to keep fixing bonding curves, fixing different things.
Yeah, and I actually think like, of course, I think as soon as like there's like 100 holders for a particular key, the price of the key goes to like 1 ETH, which prices most people out. But I think that was intended because if there's like 1,000 holders of Kobe and the shares are worth like $10, no one's gonna care, right? The only reason people care is because if 100 people buy a certain person meme coin, whatever you want to call it, the share can go to like 1 or 2 ETH, and that brings attention. And like you said, it is a bit on the team. The team can fix the bonding curve. Like later down the line, they can lower the fees. They can do buybacks of the most active key holders and whatnot. So I actually think it's like a really novel experiment, and I'm really looking forward to it. I will say that I think I saw a tweet about like, okay, like if you want to invest in like people, like you need to bet on people with like super high egos, because they're going to do whatever they can to make sure that their key trades above their other competitors. So I've seen like a lot of like ego maniacs just say, okay, like for sure I'm worth more than that guy, so I'm gonna like just buy back all my shares until like I'm above that guy.
Are you buying
So
some Adam Cochran keys? Is that what you're telling?
yeah, okay. I guess I was like subtweeting him, but there's like also other people too. But it's like, yeah, it's like Adam Cochran's just like buying back keys. It's like, okay, like that's pretty funny.
Cool. Well, we'll keep an eye on this project for sure. Obviously, it's one of the few that has separated itself out in terms of activity. So we'll, uh, I'm sure, have some updates as they develop their product. But Taiki, I wanted to get your thoughts on another of the spicy altcoin psycho takes. We can put it up, but he's basically saying, yeah, DeFi is a failed experiment. We had a balancer pool, and this is coming after recently we had a curve pool issue. So even these like very safe OG products, some of the very OGs of DeFi 1.0, are having issues, and the yields are generally not that high right now. And I know you've been a humble farmer for a long time. How do you take what Psycho is saying here? Do you agree? Is it more nuanced? What do you think?
Yeah, I agree with half of what he's saying. I do say that because the yields have dried up across the board. I don't think it's worth just like aping too much of your portfolio into like DeFi protocols. The only applications that I'm farming right now is like using Aave. I stake some ETH into Eigenlayer, and I also farm like on GMX, like shorting Avalanche and whatnot. I think that's more like a nuanced take, but I think it's unfair to say that DeFi is a failed experiment, because if you think about like the TradFi and fintech products, all the products are built around the dollar and trying to create more value around the dollar and the utility for anyone that uses it. And DeFi, the crypto native money is like Bitcoin and Ether, and DeFi enhances the utility of these crypto monies. And of course, if the value of Bitcoin and Ether is going down, then there's less value inherently for DeFi. But as soon as Bitcoin and Ether both appreciate in value, which I think we all, like, hopefully believe, that's also going to enhance like the value of DeFi. So it's very cyclical. And I've been saying that I think right now, like DeFi native applications are like just not good enough. Like nothing in crypto can beat the risk-free rate, which is a hard pill to swallow. But I think that's just how it is right now. And I fully do believe that. I think if DeFi were to come back, they kind of need to rely on like real world assets and bringing yield from off-chain sources to on-chain sources. So unfortunately, I do agree with like half his statement. I'm not really, like I don't really encourage people to like just ape their life savings into, earning 7% yield on like whatever LP positions. It's probably just not worth it.
Yeah.
And I think it's better to like just try to survive, and take bets like airdrop. Like, yeah, like most farming right now, it's not even like yield farming. It's like airdrop farming, right? I guess like I'm also farming ambient finance, which is like the bear chain dex, with like that raise of money, and Eigenlayer. I mean, like everything else is probably not worth it, unfortunately.
Yeah, so there's not that much, safe farming in the traditional sense. So we've gone down airdrop farming and more of Sisyphus style farming, I guess. Like Justin, have you been doing any farming?
Yeah, I've been airdrop farming Eigenlayer. So for those that aren't familiar, Eigenlayer is this restaking project, and they also launched like a very transparent point system. And so for the capital that you put in for the staked ETH and other variations of staked ETH tokens you put in, you get a certain amount of points proportional to everyone else, and they track this really nicely for you. And so what I personally did was I uh, built a little model in Excel where I basically, on one axis, I have the fully diluted valuation. I think Eigenlayer could launch it, and that's a range from about 1 billion to 5 billion. We can talk about how I landed at that. And on the other end of the spectrum, I have what percentage of the supply they're going to airdrop. And then from there, you can build this like great chart plotted on an X and Y axis of like based on how much capital you put in, what share of the airdrop will you receive, and then what will that be worth, right? Based on these different valuation possibilities and airdrop percentages. So for me personally, like the inputs I put in, I think they're going to airdrop between 1 and 5% of the total supply. That's a little more conservative probably than most people. I think a standard airdrop is usually about 10% now, but I think they're going to launch at such a high valuation that they can get away with a 1 to 5% airdrop. And I think the valuation will be somewhere between 1 to 5 billion fully diluted. I see this as having as high valuation as comparable layer twos right now. Eigenlayer is obviously not building a layer two, but I think it will sort of be valued in that same lens, if not a little higher, because it's the only project right now building what they're building. So for me, like these are opportunities I look at where I can safely maintain staked ETH exposure because I still want to get that 4% or so yield on ETH and then get like potential additional upside. So for me personally, about like 10% of my portfolio of ETH is sitting in Eigenlayer earning staking yields and then presumably farming this airdrop should and when they do it. So that's how I think about that.
Let's say like so I'm guessing you've modeled this out for like I'm gonna have to stake this for 3 to 6 months. What is like the yield percentage on your ETH on top of the staking yield that in your model?
I didn't calculate yield percentage. I was just looking at net new dollars that I'd earn, and simply because for me the yield is less interesting to model because I don't know how long they're going to like we're going to have to stay locked, right? Like they might not airdrop for another year, they might airdrop next month, and that would impact your APRs, basically like how long your capital is sitting there. But for me, the way I modeled it out, I think I'm expecting about a 20% return when they do airdrop it, whenever that date may be. So if you
Got it.
put in $10,000, I think I modeled out that you would earn 2,000 for doing so, and that's based on, I think, I don't have the sheet in front of me now, but about a $2.5 billion FDV and a 3 or 4% airdrop, which I think is pretty conservative. So these yields are diluted now just because when I joined, there was a lower cap on ETH. Now we're at a higher cap, and that cap was reached. There's over 100,000 ETH, I want to say, put in. So your yield's going to go down as you keep getting diluted. But for folks that were in a few months ago, I think it'll be pretty lucrative.
Yeah, like I know some people that put like a couple $1 million worth of ETH, and I think I don't have the model with me, but I think they modeled out that like if you got in like really early, you can get like a 50 to 70% APR, assuming like a reasonable valuation for Eigenlayer. So definitely worth it, right? I think anyone that stakes ETH, when they next open deposit caps, you'll probably earn at least 10% in ETH, maybe like 20-30%. And I guess we're in that state of the market where yeah, like on-chain yields not that great, so we just have to airdrop farm and like farm those imaginary points, imaginary APR. That's kind of where we're at.
This is very speculative, but and I wouldn't take this to the bank. But I've also heard that you'll get sort of potential ecosystem airdrops from people building on top of or with Eigenlayer. So this is a throwback, but if you remember, I think staked Terra people, like if you stake Terra on with Terra staking,
Yeah, yeah.
you would get like project airdrops from when they launched.
Atom has that. You can do that with staked Atom. You get all the Cosmos airdrops.
Oh,
That's
nice.
yeah.
Yeah, so I think that'll be like if you're a new project building on Eigenlayer, want to utilize Eigenlayer, it's sort of a no-brainer to use that as like a subset of people you want to airdrop to. So I think that's a potential cherry on top, but it's not something worth expecting.
I generally like listening to you talking about Eigenlayer, thinking about it from like the big picture. We're in this bear market right now, and you have a few VC darlings like Layer Zero raised at 3 billion. You have Eigenlayer. You have some of these like projects that potentially ZK Sync, very well funded. Um, and there's airdrops, there's money that those projects have to disperse with their token. There's a bunch of other ones coming on board like Pith, some of the big oracles, multi-billion projects. Um, and I think we're all hoping that a lot of these end up becoming correct, in the sense of like the VC investment at 3 billion for Layer Zero makes sense, because it is indeed going to be something that creates even more than that of value. um, and that's the bull case, and that's great for everybody. And the more scary case is like those things won't have product market fit, but because they're well funded, for people that are airdrop farming or able to participate, there's some money to be made during the bear market to kind of keep the fire burning on the wood stove. Do you guys think it's more part A or part B? What's the voting between you three?
Yeah, like for me, like every time I've gotten like an airdrop, I've like just dumped it. Like, so maybe this is like a vote in favor of like maybe airdrops aren't really like worth it from a project perspective, but I guess like you have to have like one way to distribute tokens. Yeah, I do think that most people just view airdrop farming as a way to like just extract value and like try to sell the top. And we're kind of like just basing off these eigenlayer layer zero valuations based off of like what these VCs valued it at. We have like no idea, right? Like we have no idea like what value layer zero or like eigenlayer creates. So I think it's people like just hoping that okay, like prices aren't going up. It's so hard to make money. The only way to make money, like in a safer manner, is by just depositing Ether and stables into these less tested data, like smart contracts, and hopefully be rewarded for the risk we take.
Yeah, it reminds me a lot of the TradFi thing that we were seeing during the COVID times, and this like crazy zero interest rate situation that we had going on for a few years, where it was just about getting users. Didn't really matter if you had profit. It just mattered to have some good metrics, and then you use SoftBank as somebody to kind of pump your bags. I don't know, Justin, are you more optimistic than me?
Well, I want to throw out a counterpoint that I fundamentally do believe in to this post we referenced earlier that basically airdrops are pointless and that you guys are sort of alluding to now. I think that's missing a huge piece of it. Like, yes, you're giving out free money and most people are going to dump and you're going to get Sybil attacked. But from a regulatory standpoint, I can't think of a more reasonable way to distribute a token and get your token out there than airdropping it. If you're in the US, you don't want to be selling your token to everyone. So how do you get initial liquidity and initial distribution? The only way I can think of, and maybe this is a blind spot for me, but is through an airdrop, is by giving it out to people that have used the app. Of course, it's not an efficient use of capital right now, right? It would be better to sell those tokens on the open market, or do something else with it. But this is the state of where we're at now. You can't sell your tokens. You need them to start trading if you want to eventually exit, or whatever it may be with your token. So this is the option people have. And, I've been bearish on airdrops growing communities, being sustainable, leading to further adoption, all of that. Like, I'm totally on board with that, but you need to get your token out there, and this is the only way to do it. And so I think they're going to continue for that reason. But I definitely agree they're not, super effective, right? People
Yeah.
mostly dump early, and I don't know anyone that's regretted dumping an airdrop early, right? I mean, tokens are pretty much down only against ETH. At least they have been for the past several years. So yeah.
Well, who's on the bid during these like airdrop dumping periods? Like, Thicky, do you think of, like, we had Say recently, we had some of these like larger ones. Who is buying the people selling the airdrops? Do you think about that? Is it like liquid funds, or is it just the community? Or is
I
it?
think I think I think it's a mix of both. I mean, I think it is the airdrop fractal is like a very famous thing where like it dumps hard in the beginning, but then like there's always like a rip once the dumping stops. So it could just be speculators trying to like play musical chairs and see how far they can push it, because it is like a how high can you go kind of thing, and like a lot of the Koreans tend to push up these new listings too. Yeah, I don't know if there are any genuine like long term holders that are going to buy these prices that are still left, because I feel like they've already all lost all their money.
Yeah, I'm always curious if it's more institutional or more community who is kind of, like you said, there's the sell off and then somebody's buying. We do see like a second wave of the price going up. So cool. Anyways, great conversation. I think we have a new segment that we, as usual, want to trial at the end of our episode. This one is inspired by a couple beloved Italian influencers.
Chocolate and coffee together.
Approved. Chef Burak, not approved.
It's going to be called Approved or Not Approved. And we're going to see some interesting tweets, and we'll see. We'll see if you guys approve or not approve. So one that went the rounds this week, Chamath has gotten a little bit snarky. There's been some back and forth between Chamath and some Twitter folk. And what do you guys think of this take?
Yeah, this was a good one. I'm a big all-in fan. I think with this podcast, we're trying to go for all-in vibes, but for crypto. So I'm not anti-Chamath by any means, but he got absolutely roasted. So he posted this reply to a journalist, Joe, from, I think he's at the Wall Street Journal, talking about how Chamath has sort of just like pumped these SPACs. And Chamath made fun of basically journalism as a career, this I'm a journalism meme. And then this random guy with actually has quite a decent amount of followers, just posted I'm in the arena, just sort of like mocking VCs for thinking or for like promoting this idea that they're like absolutely building. And some of them are, of course, but I think Chamath's reputation is more, he's launches these SPACs and sort of dumps on the market. And we saw a lot of that during the COVID bubble. So I thought this was hilarious.
Can we talk about how brutal this ratio is? I mean, this guy got less views than Chamath's tweet, and he hit the ratio is 2,172 to 47. I mean, this is a 50. I don't think I've seen a brutal ratio like this. Just for the entertainment value, definitely approved.
Approved.
Yeah, but you kind of see this similar sentiment in crypto too, right? Like this anti-VC sentiment, and like people might not like what's happening with Friend.Tech, but at least people are trying to launch something that trying to get people to use. And in a way, like the on-chain degens, like we are in the arena, like we're like depositing money into these untested protocols and like just trying to speculate. And I do like the idea behind Chamath, but like I guess like the person saying it, I guess it doesn't really resonate with his audience because he like just dumps specs, right?
If you are an all-in fan, I just, not to interrupt, I want to throw this out there. I'm actually going to the All-In Summit because I'm in LA and it's happening in LA, so it's mid-September. If you're going to the All-In Summit, drop a comment below. We should meet up, do a Steady Lads meet up there.
I mean, I think it is like a common, like you said, like there's a combination in crypto where it's like it's hard to balance the sort of material wealth and like also social wealth. It's hard to be rich and well liked, especially when the reason why you become rich is by, I guess, going on national television and telling everyone to buy your SPACs and buy Tesla, and then dumping on them at the top, and then having everyone lose a bunch of money. Like I feel like Chamath is being a little bit tone deaf here and not recognizing like that sort of zero sum nature where he basically just dumped a bunch of shares, worthless shares, on American retail and profit hundreds of millions, if not billions, off of it. But yeah, I think that's just a trade off you have to make. I still like the guy, but yeah, I think he's being a little tone deaf here.
All right. Well, hopefully you don't get kicked out for the summit for making fun of Chamath, Justin. But yeah, this one was approved. Let's see what else we have. NYT don't miss. What is this one?
Taiki, this is yours, right? Do you want to walk us through this meme that we've been seeing around crypto Twitter?
Yeah, so I guess it's like this idea that male virginity is on the rise, male loneliness is on the rise, and the only way to like bet on like that trend is to bet on crypto, because I guess crypto is mostly a male dominated industry. That's that happens to be like terminally online. And this trend towards Friend.Tech and like these mini bubbles that form around some of these creators. Maybe this is like literally like if you want to bet on male loneliness, you like buy Friend.Tech shares and like hope the airdrop's worth something. So
what the hell is going on in this picture? Is this guy this guy with a mustache has these like crocodile tears watching some people play paddleball, and he I don't understand this. He want to
That is
play
pickleball.
pickleball, and they don't let him play, and he's crying. What's going on here? I don't like. This is not approved by me. I don't know what you guys.
No, I think the original meme is like, I don't know if where you're based, like pickleball is blowing up, but here in the US, like pickleball is this crazy phenomenon over the last year or two where like everyone's pivoting from tennis to pickleball. Everyone is into pickleball. It's all guys can talk about. And so I think the original New York Times article is pickleball the cure to male loneliness? Or is male, yeah, which is hilarious. So I think it's just the same picture replicated.
Okay.
yeah, it's a crypto bro that's that his friends are touching grass.
Okay.
Oh, nice. I like that.
So the title is like inspect elemented. It's not like a real.
Oh fuck!
Is that
Yeah.
what's happening?
Yeah, this is
Okay.
edited.
I was about to say, I was like, wow, July 19th. That was like some amazing foresight.
No, it's
All right.
totally fake.
So I have mixed feelings. Is this approved or not approved?
Approved, 100% approved.
Approved.
Betting
Wow,
on
another-
BTC and ETH is betting on male loneliness.
I mean, like, there's been a whole generation of like people just playing video games all day and like being online, terminally online, and like having them, I guess, provide price discovery for assets might be like a good use of their time compared to having them play video games instead. I don't know. What do you guys think?
The one thing I like about crypto Twitter is it's like a meritocracy, right? Like you don't have to have like a crazy background to gain followers. If you have good ideas, then you can gain a following. You can have like online friends, and actually think that crypto is exclusive in a sense that it's like mostly male dominated, but it's also inclusive in the fact that you don't have to you can like just spin up an online avatar and just start saying things. And if your ideas resonate, then you're going to be part of a community. So actually, kind of like it's kind of like a double-edged sword, I suppose. But I think CT is like a really interesting like niche community that you can't find elsewhere.
Yeah, and this specific joke did go over my head, but I can see that it was a joke in the end. Okay, all right. Well, approved for managing to level us. What else do we have?
So we have one last one here that is dedicated to our co-host Thicky here. Who wants to walk us through this one?
This seems to be a thick collective. Is this an actual NFT collection?
I think so. I think it exists.
I need to sweep the floor on this one.
When several of these thicks gather, their thick electric cheeks can cause thunderstorms. The art is amazing. The colors pop out. We have a thickie here. I mean, this is a home run.
Yeah, I think I have to go buy one right now off Blur or something.
I disapprove. This is inappropriate. Shouldn't be part of the podcast. We should move on.
I went on OpenSea. I found the link. It has a 6.9 ETH floor.
6.9 ETH? Jeez.
Yeah.
What the hell?
What?
Well, I mean, I doubt it's been traded, right? It's like just one dude like listing it. I don't even know if this is like the real one. There's like
Thicky, is this your collection? The Thick Labs generation?
But there's holographic ones too.
there's some unrevealed. Interesting.
Oh, I hate NFTs.
But can you look at Thick Blastoise? So you scroll
Where is
down.
that one?
Scroll down a little on the left. The yeah, that one.
Oh wow, look at it's actually nice imagery.
The art's actually really good.
Yeah, I approve. I approve this. I approve this collection.
Approved.
Is that shine supposed to be like this is supposed to be like the gloss on a physical card as you move it into
Yeah,
the light?
yeah, exactly.
Wow.
I'm still disapproving. It sounds like you guys all approve though.
Yeah, heavy approve here.
Pokemon was my childhood, so
All right, folks. Well, looks like we have a clean sweep of approval for the most part. Let us know what you think about this segment. Next time, we'll try to have some not approves as well. And yeah, catch us next week. We're looking forward to having a bit of a trader-focused conversation next week as well, with our first guest potentially. So till next time.
Bye, everyone.